Andrew, it's great to see you again. Welcome.
Thank you. Glad to be here.
Are Crocs still the hot thing, because sometimes people say yes, and then sometimes people say no, and then they say, hey, dude, isn't doing as well as they'd hoped, and all of these cross currents, and then the consumer, and then tariffs. So how's it looking from your point of view?
Yeah, look, I would say the proof of the pudding is look at our Q1, right? So we had a great Q1, Crocs up about 4%, including the U.S. and international. Hey Dude beat our expectations, the guidance we provided, and we were able to produce $3 a share in terms of earnings per share, 20% ahead of what I think the market was expecting. So really good Q1, strong performance in the Crocs brand, strong performance in Hey Dude. And so, we withdrew guidance because there's tremendous uncertainty in the future, both actual costs, how much we would have to spend on tariffs, consumer uncertainty, and how that might play out over the year. But I think we've got two strong brands that have a bright future. And today we're executing very well. I have to end up buying them for my kids because they want the little. What are the things that you like? The gemstone things that you stick on? Thank you, Jibbitz. And I was walking by a lacrosse store in town earlier, and they were advertising I saw the word Crocs, but they were not actually selling the shoes. They were just selling, I guess, those Jibbitz, as they're called. Are these like the AirPods to your iPhone? Yeah, so Jibbitz is a way for the consumer to personalize, right? So, but it's also an incredible revenue and profit stream for us. So the consumer buys a pair of a classic clog, a white classic clog. We literally sell tens of millions of those every single year, and then they can select a series of Jibbitz to go with them. And what they're doing is they have a completely customized shoe that nobody else in the whole world has. And that trend and that desire for consumers to have something that's a one of a kind, they can do it with a combination of our classic clog, our Jibbitz, and sometimes we see consumers spending as much on their Jibbitz as they do in their for the shoe that they purchased. But then as you indicated, they also have the opportunity to renew and buy new Jibbitz as maybe they have someone to celebrate in their life or something they want to be recognized for. All right, but again, you're doing a disfavor to the parents out there who have to just go, okay, all right, you want the Jibbitz, and we have to keep track. But I think it is a fascinating way to kind of leverage the brand. So a little bit on the tariff front, on the consumer front, if you didn't have any macro data or any CNBC in front of you, how would you describe the landscape right now? Yeah, I think there's probably three things going on for us, right? One is there's uncertainty about what we're going to incur in terms of additional costs for tariffs, right? So right now we're sitting at a place we've got 10% on most of the countries we bring our merchandise in from, and 145% incremental on China. We're in a 90-day pause, and we don't know how that ends up, right? So I think we were on our call this morning really transparent with our investors about where our goods come from. We've spent, probably the last 6 to 7 years diversifying our sourcing base so that we have sourcing in a number of different countries so we minimize our risk. But we still have a lot in Southeast Asia, whether it be Vietnam, Indonesia, et cetera, or even India and some in Mexico. So that's an uncertainty. I think the second uncertainty that we're faced with is the consumer. I think in the prior segment, you had the University of Michigan consumer confidence data up, and you see a very steep decline in consumer confidence. I would say in our actual business, that's not showing up today. As we look at March and particularly April, we see pretty strong business. So we're encouraged by that. But then we see that uncertainty, and when does that show up, or does that show up in their desire to purchase footwear in general, or in particular Crocs and Hey Dude? Right. So we're worried about that. So we've got these compounding uncertainties. I think what we have to do as a company and as a brand is focus on what we control. So we did initiate some significant cost reduction activities over the past couple of weeks to make sure that we're prudent in our investments and our expenditures. But we also have to be offensive. We have to make sure we're bringing to the consumer new product, that we're marketing to them effectively. We're reaching them on TikTok. We're selling to them on TikTok Shop. And we're doing that around the world. So we're focused on being prudent and conservative in certain areas. We're also focused on making sure that we're really bringing the best product, the best marketing to our consumers so we can encourage them to buy. TikTok Shop, as long as it's around. We have to go, but it's about $40 or $50 a pair, if I'm not mistaken, if I just kind of scroll Amazon.
Could that go up to $75, $80?
It would never go up that much. I mean, I think we do have to pass on a little bit of cost if we get incremental costs, and that's the only reason we would do that.